Gopal Balachandran, the CEO and CRO at ICICI Lombard General Insurance, joins us on the show right now. Mr. Balachandran, great to have you today on ET Now. I want to talk about what you've seen in terms of monthly growth updates, because your GDPI growth has been always more than overall the other private players. But the growth for August was a little below your own run rate, that of 16 to 20%. Help us understand why this dip and whether this is just a one-off aberration.
Good morning. I think that's a great question to ask. I think if you ask us, I think what we have always maintained is insurance is relatively a long-term growth opportunity. And therefore, to that extent, I think it would be great to look at numbers more on relatively longer periods, while monthly / quarterly or annual period growth rates are relevant. But ideally, to look at the numbers will be much more from a longer term perspective. And in that context, when you look at, let's say, for the general insurance market over the last 24 years, I think the sector has compounded at roughly at about 16% thereabout from an overall market perspective. And within that, I think from an ICICI Lombard standpoint, our approach to writing risk has been to significantly drive profitable growth. And that's why the point that you made in terms of us, at least when you look at the current year, for example, I think we have had a significant relative outperformance compared to the overall industry numbers. That's how we are always positioned, largely looked at driving profit pools. And within that, obviously identified segments which we think are viable from an underwriting standpoint.
Right. So could you give us a number as to when is it that you will get back to high teens, and will that happen in the second quarter?
So honestly, again, let me put this in context. Okay, so if you look at, let's say for the month, even if you look at it on a 5-month basis, we had a growth of almost about 17% or thereabout. The industry growth was roughly at about between 10 to 11%. So in that sense, I think we have had a significant outperformance, the point that I earlier made. Our sense is, I think this market, when you look at it from a longer term trajectory standpoint, should continue to exhibit that growth range of 15 to 20%. And what we have maintained, at least when we have talked to the market, we have said we should ideally continue to see that 100 to 200 basis points outperformance from a revenue standpoint. But this, of course, is keeping in mind how the industry responds in terms of profitable outcomes. As we speak, the industry seems to be looking better in terms of the trajectory to improve underwriting. And in that context, again, when you look at our own underwriting numbers, I think we have been able to kind of pretty much be on track in terms of what we have talked to the market at.
Right. Morning, Mr. Balachandran. Given that there's a market share gap between the top player and your company that's only narrowing, I want to understand what strategy you're using to become a market leader in the segment. Is it largely driven by health and motor?
So again, that's a great point. I think in terms of from an ICICI Lombard standpoint, effectively the USP that works well insofar as the policyholder interest is concerned are multiple factors. I think, for example, the brand ICICI Lombard itself kind of significantly resonates when it comes to policyholder satisfaction. And within that, I think it's in terms of some of the core capabilities that we have largely looked at driving is make significant use of data and analytics to our advantage. We have significantly leveraged technology as a means to drive efficiency and satisfaction insofar as the customers are concerned. And equally and more importantly, I think what we have largely put a lot of emphasis on is claim service. That again significantly distinguishes us from the rest of the market. And in terms of the segments where we have looked at potentials for growth is clearly from an aggregate standpoint, it's motor, it's health, and of course the commercial lines, which typically wherein we offer insurances to small / mid / large corporates. Those are the opportunities that one sees. But within each of these broad 3 segments, I think we try to do a lot more segmentation of various categories and try and write risks which are contributing to our profitability growth outlook.
You recently highlighted that the competition is moderating, specifically in the health segment. Does that also mean that pricing competition is also moderating and there could be a scope perhaps for price hike?
So I think a couple of factors to it. I think the point that when I talked about in the context of health was largely in the field of corporate / group health. because that was a segment which had kind of significantly got quite aggressive in terms of pricing in the last several years. But since the last couple of years, obviously the industry could not sustain those levels of outcome when it came to underwriting, and that's the reason now companies are talking about possibly making a price change from an overall market perspective. Again, when you put that in the context of ICICI Lombard, I think at those times when the industry was significantly elevated on, or let's say stressed on pricing, I think obviously we calibrated growth and lost market share. And now that market is starting to look far more disciplined in terms of underwriting, again, you would have seen in the context of corporate health or group health for ICICI Lombard, we have again had a significant relative outperformance compared to the industry numbers. So that's been largely the thought process that we have largely driven. Try to look for time cycles when the market starts responding favorably. And therefore, to that extent, the focus shifts a lot more into customer service, where from an ICICI Lombard standpoint, as I said, we have had a relative edge. So hence, to answer your point, definitely, again, this segment looks positive from a corporate health standpoint. But just slightly digressing away from health, again, if you look at it in the context of motor, for example, again, we had seen post-COVID for almost about close to 2-3 years, there was significant price competition getting exhibited in the market. Similar thought process is what we had exhibited even on motor during this period, where we actually ended up losing market share. But now as the market is starting to show some signs of semblance, I think we are possibly starting to see, again, outperformance for ICICI Lombard in the context of the market numbers.
Okay, fair enough. And you also showcased the use of AI. You launched Elevate as a product in the health segment. Tell us a little bit more about the use of technology or any new products in the pipeline.
So technology for us has been a great business enabler. I think whether you look at it in the context of our sourcing of policies, or even when it comes to the experience that the customer gets exhibited to in terms of claim satisfaction, and more importantly also in terms of the way we are organized ourselves in terms of our internal processes. And therefore, to that extent, as I said, technology is a key enabler. And that's one area where we have obviously wanted to put a lot of focus on. And across areas, I think we have been able to kind of leverage significant efficiency and productivity improvement through the use of technology levers, whether it is through AI, whether it is through robotic process automation, or whichever other aspects of technology that we have been able to invest in. But just on the point on Elevate that you kind of referred to in the context, that's a new product offering that we launched about a couple of months back. I think that the product solution that we launched was clearly kind of factoring in the feedback that we got from customers, distributors, and other relevant stakeholders. And therefore, when we kind of launched it a couple of months back, I think clearly over the last 2 months, the uptick on that particular solution has been quite favorable. And possibly early days, again, we would obviously want to kind of look at it over long periods, but at least the 2 months in terms of when you look at the retail health market share for us, which was largely hovering at a slightly less than 3%. In the last couple of months, I think possibly we've been able to get a reasonable delta, again, in terms of jump in market share. But as I said, obviously we will wait for the solutions to play out. But that's something, again, a work in progress. Elevate is just one of them. Maybe over the next couple of quarters, I think we would possibly end up launching a lot more solutions when it comes to product profile.
Okay, interesting. And we'll await to hear all of those. Good chatting with you today. Thank you so much for taking the time out.
Thank you so much. Thanks.
If you like this video, then like, share and subscribe to ET Now.